So, November 14th, the crypto market got hit, and it got hit hard. Bitcoin, the one everyone watches, just plunged. So, what on earth happened? Let's break it all down.
And really, that's the big question, right? Why did Bitcoin suddenly drop 4%? It seemed to come out of nowhere and it caught a lot of people off guard. Okay, so you hear 4% and you might think, what's the big deal? But we're talking about Bitcoin here. A drop like that means billions, with a B, billions of dollars in value, just poof, gone in a few hours. And you've got to put this in context. This wasn't just some random dip. No, this pushed Bitcoin to its lowest point in 6 months. Think about that. Months of gains completely wiped out. That's the kind of thing that really shakes up investor confidence. So what was the culprit? Well, it turns out it wasn't just one thing. We're going to look at three key pieces of this puzzle. What was happening in the bigger economy, the intense selling pressure inside crypto itself, and then that good old-fashioned wave of fear. All right, first things first. To really get this, we have to zoom out from the crypto charts and look at the bigger picture. Because what was happening on this day? Well, let's just say the entire financial world was holding its breath. You had two major storm clouds gathering. First, everyone was freaking out about what the U.S. Federal Reserve was going to do with interest rates. And second, there was all this uncertainty from that recent super long government shutdown. Nobody really knew how healthy the economy was. And check this out. This shows you just how quickly things went south. Just a week before, the market was pretty sure, like 64% sure, that the Fed would cut rates. Now, why does that matter? Well, lower rates usually make risky stuff, like Bitcoin, look a lot more appealing. But in 1 week, that confidence just cratered, down to 45%. It was basically a coin flip. This is where it gets really interesting. Analysts started using this phrase, economic blindness. And what they meant was, because of that government shutdown, key reports, stuff on inflation, on jobs, they just weren't coming out. So the market was basically flying blind. And you know what investors do when they can't see what's coming? They sell. They sell first and figure it out later. So all that fear in the big economy, that was the spark. Now let's look at how that spark lit a bonfire inside the crypto world, because it set off this massive, massive chain reaction of selling. Get this number in your head, $900 million. That's how much money and leveraged trading positions got absolutely vaporized in just a couple of hours. This wasn't a slow trickle of selling. No, this was a full-on tidal wave. So where did that $900 million come from? Mostly from what we call leveraged traders. These are people borrowing money to make huge bets. When the price started to drop, their positions got automatically liquidated. The system just sold their Bitcoin to pay back the loan. And this is where you get a nasty domino effect. That forced selling pushes the price down even more, which, you guessed it, triggers even more forced selling. And it wasn't just one group hitting the sell button. The pressure was coming from everywhere. You had those leveraged traders getting wiped out. You had long-term holders, people who'd been sitting on profits, suddenly deciding, yep, time to cash out, at the fastest rate we've seen in almost 2 years. And then the big players, the institutions, they pulled nearly $900 million out. It was a stampede for the exits. Okay, so we've got the shaky economy on one side and this automatic, mechanical selling pressure on the other. But there's a third ingredient, and honestly, it might be the most powerful one. Pure, raw human emotion. Because at the end of the day, markets aren't just about math. They're about psychology. And there's actually a tool that helps us measure this. It's called the Fear and Greed Index. It's pretty straightforward. It's like a mood ring for the crypto market. It gives a score from 0 to 100. 0 is extreme fear, meaning everyone's panicking, and 100 is extreme greed, where everyone's feeling euphoric. So where was the needle on this particular day? It slammed all the way down to 16. 16 out of 100. That is not just people being a little nervous, that's full-blown panic. It tells you the vibe in the market was just absolute pessimism, a feeling that things were only going to get worse. And that's why some experts called it an emotional shakeup, which I think is the perfect way to put it. Their whole point was that this wasn't happening because something was fundamentally broken with Bitcoin. Now, this was a fear-driven sell-off, plain and simple, fueled by everything else we've been talking about. So when you put it all together, you see the big picture. It wasn't one single cause. It really was a perfect storm. You had the fears about the wider economy, the weird mechanics of the crypto market, and raw human panic all crashing into each other at the exact same moment. And here's a really critical point to understand. Bitcoin wasn't on an island here. This anxiety was hitting everywhere. And the proof? Just look at how it was moving almost perfectly in sync with another major part of the financial world. And you can see it right here. The same day Bitcoin dropped 4%, the NASDAQ, the stock index packed with tech companies, it dropped 2%. They were dancing to the same tune, reacting to the very same fears. So let's just recap the whole chain of events. Step 1, big picture economic fear makes investors get all defensive. Step 2, that fear lights the fuse in the crypto market, triggering a huge cascade of selling. And step 3, all that selling creates widespread panic, which just feeds on itself and makes the drop even faster. So what's the big takeaway from all this? I think it's this. Right now, when the economy gets shaky, Bitcoin isn't acting like digital gold, a safe place to park your money. It's behaving a lot more like a high-risk tech stock, riding the same emotional roller coaster as the rest of the market. And that, of course, leaves us with the million-dollar or maybe billion-dollar question for the future. Is this just how it is now? Will Bitcoin ever actually break away and become that independent, safe asset that so many people hope for? Or is it always going to be tied to the ups and downs of the traditional markets? That right there is what everyone's watching to see.